Let me ask you something. Have you ever bought crypto, watched it drop 20% and thought, maybe I should just hold, it'll come back, and then it drops another 30%? This is exactly how beginners lose money in crypto. Not because crypto is a scam, not because the market is impossible, but because no one teaches them how to survive. Today, I'll show you why beginners lose money and how you can stop being one of them. Why this matters. Crypto moves fast. Bitcoin can move 5 to 10% in a day. Ethereum can move even more. If you don't have rules, the market will take your money. And the painful truth? Most beginners don't lose because of bad coins. They lose because of bad decisions. Let's fix that. Mistake number 1, no stop loss. Here's where most traders mess up. They enter a trade with no exit plan. Example, Bitcoin is at $40,000. You buy because it looks strong. Price drops to $38,000. You think it's fine. Then it drops to $35,000. Now you're stuck. A stop loss is simply a price where you automatically exit to protect your capital. If you had placed a stop loss at $38,500, you lose a small amount, maybe 3 to 4%. Without it, you could lose 15 to 20%. On futures, it's worse. No stop loss plus leverage equals liquidation. That means your position is forcefully closed. Your capital is gone. Action step. Before entering any trade, decide where you are wrong. Place your stop loss there. Risk only 1 to 2% of your total account per trade. Capital protection first, always. Mistake number 2, chasing pumps. This is the part nobody tells you. By the time you see a coin pumping on social media, you are late. Ethereum jumps from $2,000 to $2,200 in one day. Twitter is excited. You buy at $2,220. What happens next? Early buyers take profit. Price drops back to $2,050. You panic sell. This is called buying high and selling low. Instead of chasing green candles, wait for pullbacks. If Bitcoin breaks above resistance at $40,000, don't buy the breakout blindly. Wait for it to come back near $40,000 and hold, then enter. Action step. Never enter a trade after 2 to 3 big green candles. Let the market calm down. Patience saves money. Mistake number 3. Over-leverage in futures. Let's talk about futures. This is where accounts disappear. You see 20 times leverage. It looks attractive. Small move, big profit. But here's reality. With 20 times leverage, a 5% move against you wipes out your position. Bitcoin moves 5% in hours, so you're not trading, you're gambling. Professional traders survive by using low leverage. 2 times, maybe 3 times. Sometimes no leverage at all. Action step. If you're a beginner, focus on spot trading first. If using futures, use low leverage and strict stop loss. Survival greater than excitement. Let's change your mindset. Beginner mindset. How much can I make? This coin is going to the moon. I'll hold until it comes back. Smart trader mindset. How much can I lose? Where is my exit? Does this trade fit my risk rules? This shift changes everything. Instead of trying to win big, you focus on losing small. And small losses are manageable. One 5% controlled loss is better than one 40% emotional mistake. Simple do's and don'ts. Do. Use stop losses. Risk small amounts per trade. Wait for confirmations. Keep a trading plan. Don't. Chase pumps. Trade with emotions. Use high leverage. Go all in on one trade. Crypto is not easy money. Bitcoin and Ethereum move in cycles. There will be drops, there will be fake breakouts. Your job is not to predict everything. Your job is to protect your capital. Because if you protect your capital, you stay in the game. And the longer you stay in the game, the better you become. That's how professionals think. If this helped you understand why beginners lose and how to stop being one of them, like this video, subscribe to BitBlast Coin, and comment below, what mistake have you made before? Let's learn, let's improve, and let's trade smarter, not emotional.